Thank you very much, Steve. And thanks all for having us. So for a bit of framing for what we're about to talk about, in recent years, we've watched decentralized finance, or DeFi, become used for more and more retail users for more and more purposes. So we've also seen an increasing number of traditional financial firms, like proprietary trading firms, like hedge funds, like asset managers, and even some banks now start to use this technology for new or existing purposes. So in this panel, we're hoping to reflect on what we've seen and also lay out some of our expectations for the future. I'm really pleased to be joined by Sophie McKendry, who looks after external affairs for Koji Capital and formerly was a political advisor for federal politics, by Egor Sidelska, who you can see is a co-founder and director at Magnet Capital and has a famed background in all things private equity, portfolio management and SaaS as well. And John Deane as well, the CEO of Trovio Group, who has a background at JP Morgan in commodities trading. So to start us off, I'd like to hand over to Soph to give a quick explanation of what is decentralized finance for those who may not know.
Thanks, Jack. I think in the context of this panel in particular, it's probably important to highlight why DeFi is different or revolutionary compared to traditional finance. And to me, there's probably two key things to highlight. Primarily that via this open source infrastructure and trustless infrastructure, you abstract away the need for intermediaries like banks in order to transact. And in so doing, you're not just open sourcing this software, you're open sourcing the service providers. So when I say that I'm a DeFi user, to me that means that I have a lot more financial tools in my back pocket and a lot more agency in the way that I transact maybe than I could in the legacy space. That means that the agents in the transaction layer are a lot more fluid. So I can be a lender, a borrower, a market maker, a liquidity provider, and so on, versus in the traditional finance space, those rules of engagement are predefined and preset, and everyone knows the actors and how they kind of operate within the rest of the space. So yeah, to me, it's really about kind of open sourcing the service providers just as much as the software.
So to John and Egor, as I sort of mentioned, both have backgrounds in traditional finance. So I'm really interested to hear perspectives on coming from traditional finance to decentralized finance. What are you seeing that couldn't or wasn't being done in traditional finance that is being done in decentralized finance? We'll start with you, Egor.
Sure. So this is a really interesting topic. You've got entire industries that are created for marginal differences. So think of foreign exchange. You're a little bit faster, you're a little bit cheaper, and you're a little bit more accessible, and you've got an entire business. So what decentralized finance does is it allows you to disintermediate basically all of that. Instead of saving 1%, you save 30%. Instead of having T plus 2, whatever the hell that is, it's immediate and it's real time. So those things are all completely transparent. They're accessible to absolutely everyone. And for the first time ever, you have a two-sided marketplace, as Sophie mentioned. You can take either the bank's role, where you provide the product and service, or you can take the client's role, as we do today.
John?
Yeah, thanks. I'll add a little bit to that, maybe, of Egor's. So obviously my background is commodities trading, and for me, the application for DeFi, at least initially, is actually in a subsector of closer to crypto, and commodities actually is very much in that space, right? It's highly unregulated, particularly the physical market. And when you think about what Egor's saying here, you can actually reimagine what the landscape could do for spot physical commodities. In that instance, what I mean is all the transaction value that at the moment is being retained by banks, marketplaces like the ASX or the CME, could be attributed back to effectively the commodity originators. At the moment, it's a negative carry, right? If you hold a physical commodity, you effectively have trapped equity, trapped capital sitting in that commodity, and you have trade finance solutions, repo structures, all these types of, I'd say, rent-seeking solutions, which I used to be involved in. And those solutions ultimately can be eliminated, and that's what I mean by reimagined, by moving that value directly back to the asset or GDP creator in the first place. So for me, it's like we're reimagining or rethinking exactly what we want to do here, and it's about replacing entire industries and unlocking a lot of value that at the moment's being siphoned off. And there's a lot of OPEX, right, associated with running a marketplace. There's a lot of OPEX in running a bank. Now, all that OPEX, obviously, not all of it, but a lot of that OPEX can be reattributed back in this instance from a transactional value point. The bit that needs to be answered, I think, is the licensing component. A lot of people talk about Tier 1 markets license and how you could operate that in a securities instance. And, for me, I don't think we should be thinking about trying to operate under the current regime and just have some sort of central counterparty to it. I think we need to be thinking about breaking apart market licensing, breaking apart what the key components are of like a Tier 1 markets license, and whether that's a validator node or whether that's done in a different way. We talked before on the previous session, I think it was Michael Kong, but was talking about, self-identifying KYC functions and how that could eventually operate as well. But, ultimately, I think DeFi, for what we're talking about as a sector within crypto, is the most exciting thing, I think at least for financial markets that we're going to see in the next 20 years. It's going to disrupt huge numbers of industries, not just, banks and stock markets, but it's actually going to move value across ecosystems. And it's going to make industries that previously were marginal, no longer marginal, and previously, very profitable industries, I'd say, trading at the margin.
Yeah, thanks, John. And just to drill down there as well, I think for those of us who were there yesterday, we heard Minister Hume very clearly talk about the early gold markets in the 17th century. And it's interesting that since then we've heard a number of comments be made about the natural resources in Australia and how that sector may particularly become relevant to this sector and what we've been doing for the last couple of years. And so I think, John, you probably have a unique perspective on what 12 months from now, 24 months from now, might look like in terms of natural resources and this sector.
Yeah, I think, there's two parts to that question. I think, one is our technology is a fantastic solution for provenance tracking, ESG tracking, these types of things for physical assets. Obviously, that's becoming a critical part of society for obvious reasons around, the environmental footprint of extracting an asset. One commodity from one space, they're not really commoditized, right? If you extract, natural gas out of one well versus natural gas out of another well, there's a different methane leakages from those wellheads. So for me, there's a solution around the provenance component and what we can ultimately do from blockchain by moving capital to more environmentally friendly commodities, right? And I don't mean, oil versus gas. What I'm talking about here is different wells of natural gas. And then second part of that is what it means for, what I was sort of explaining before around the virtual marketplace. And this is the term, I guess, we not coined, but, the way I think about it is that ultimately DeFi will become a virtual marketplace. All these assets will trade in a decentralized way, the same way we're talking about Uniswap or SushiSwap, but, it will have a different sort of UX obviously to it. There will be gated sort of KYC AML requirements, which I think still needs to be solved for. I know it's happening at the retail level, but at the corporate level, companies can't have some sort of breach of trading, for instance, with a Iranian company, right? Having some sort of Iranian company or trading with a sanctioned nation or something along those lines. So there are huge risks from companies or corporates entering into this space. But back to my first point, if you can change the carry to being a positive carry for these assets, then people will make the move and faster than you probably think.
Yeah, no, for sure. And taking, I guess, a step back, Sophie and then Egor, what's the most interesting or exciting example of traditional finance working with decentralized finance?
Sure. I'll take the opportunity to give a plug to a Koji portfolio company, which is Maple Finance. And I'm sure some of you heard from Sid this morning, but I think Maple is a great and market-leading example of a product that's offering institutional borrowers, access to these DeFi rails, and then on the flip side of the equation, DeFi users, an option to engage with really sustainable and competitive yield. And I think their product offering is set to expand, and we'll continue to onboard more institutional borrowers.
Yeah. If I look at it, if you've taken the institutional, I'll take the retail. Block Earner, I think, is the firm that Michael Kong before was talking about, where they've taken a traditional approach to getting retail public access to decentralized finance assets, things like yielding and pooling and staking, which traditionally you will need to have some competency in crypto to get involved in. They've created essentially, for all intents and purposes, a bank account that you can deposit money into that gives you access to that back end. So that's on the retail side of things.
Yeah, for sure. And sticking with you, Egor, as well. How do you see the future of finance? Is it centralized? Is it decentralized? Is it going to be a mixture of both, maybe?
Yeah. So this is a really interesting one. Everyone at the moment thinks that it's banks versus crypto, and frankly, it's just not the case. You absolutely will need these banks, and bear with me here. If you take a step back, all that they do is they provide a service, and that service, for when central banking digital currencies exist, and they will exist. When have you ever had governments that forego more transparency and more control? Pretty much never. So you can bet that they will exist. Banks will turn into on and off ramps. And what they'll do is they'll provide the facilities and the services to be able to get onto the crypto or the digital sphere. So they'll exist in a completely different capacity. You will have to have some decentralization and some centralization involved in that process. As part of that process, you actually reward the individual for being part of that ecosystem. So AUD coin, the on and off ramps for AUD coin will still be largely governed and potentially even controlled by the banks and by the government. But you will give individuals access to things like crypto, where they don't need to effectively know that they're on a blockchain backend. Just because you're interacting with a bank front end doesn't mean that you need to know that it's on a crypto backend. And that crypto backend allows you to be more transferable, faster, more control, more secure. So that's how they're going to interact. That's how they'll exist.
Yeah, I think it's a really interesting question and probably the crux of this panel. So I'd like to give John and Sophie both an opportunity to answer that question as well. So John first, is it centralized, decentralized, or both?
I think, as Egor said, I think it's highly unlikely that we're moving towards a decentralised world, particularly in the next, a fully decentralised economy within the next 5 to 10 years, right? I think there's going to be a number of questions that need to be answered, particularly around how we tackle a lot of the KYC AML, how you sort of manage it from a regulatory and licensing standpoint, even how we look at corporations law, right? Corporations Act, and how that looks as a central body in the middle. So all of those things need to be addressed, and that's going to take time, right? Nonetheless, I actually think eventually we will move towards a more, let's call it, majority stake in decentralisation. I think the banks will have a much smaller role in what they play. I think the on-off ramp analogy is a pretty good way to sort of peg where they'll be. Maybe it won't be exactly that, but I think it's that sort of size role, I think, is where they'll be playing. A lot of the services that DeFi are providing today could eventually be a subsec or a subsidiary of a bank providing some sort of service along those lines as well. If you look at some of the different applications out there, whether it's Yield app or whoever, they're all doing a similar sort of product, right? It's a centralised organisation participating in DeFi to give retail access today, right? So I think that's where the centralised, decentralised overlap will take. However, my broader arching view is that even we think about what is the role of banks in the last 30, 40 years, it's changed dramatically, obviously, since we went off the gold standard, right? And that's a big part of what we're talking about here, and you could argue the evolution of crypto has been driven somewhat by that as well. So if you were to believe that we were going to change how we manage our monetary base, and if we were to, for instance, go onto a Bitcoin standard or back to a gold standard, or and move towards that sort of ecosystem, then that reduces the role of the banks even further, because historically their role is, whether it's in global markets, capital markets, finance, all this stuff is driven by leverage, and that's all become available really since we went off a gold standard overview, or policy. So yeah, for me, there's two real key components to that: licensing, regulation, and then and how long that takes to be mapped out, solved for, and then the second part is, is there a bigger macro thing that also needs to be addressed?
Yeah. And Sophie, lucky last, what do you think?
I would say it's probably all in the power of the users, right? I mean, I think at the moment it's kind of this renaissance of choice or, the notion that we're going to inject a lot of competition into the banking sector in order to compete with the yields that you can experience in DeFi. But I think, different users have different requirements around their risk appetite, their UX, what they're looking for out of a financial product, and analogous to, some people opting to self-manage their super or engage in their, self-manage their stock portfolio versus being wrapped up in a fund or engaging a stockbroker. You're probably going to see the same thing emerge within this marketplace, where you have a sophisticated user that's happy to operate at the protocol layer, but a very large demographic who are more than happy to access these products within the centralized interface that they're used to, and regardless, that's a healthy and competitive marketplace.
Yeah, for sure. And for the last question before Steve kicks me off, I think one thing that's worth noting is just how much this group has grown in the last 12 months, but also how much has happened in this industry in the last 12 months. And that's thanks to all of you in the room, and probably thanks a little bit to Steve as well. But looking forward, when we're back here in 12 months' time, I'd like to give each of you the opportunity to make a prediction for something that you expect to happen between this blockchain week and the next blockchain week. DeFi or not DeFi, how do you think the industry is going to change? We'll start with John.
I think, it's a question. Hopefully, I think once back to regulation, I know it's not that exciting, but it's going to change the landscape, right? So I think it's fantastic, what Jane Hume and obviously Senator Bragg have been working towards, particularly here in Australia. I think it's changed the game for Australia, and I think Australia is pretty well positioned to be a leader in this space as a result of that. And that's largely because of most of these people in this room working with the government around how we can participate within their ecosystem. For me, that could change what it means for innovation here in Australia, but ultimately, if we could get a regulation in place, I think in the previous question or previous panel, there was a question around when's the institutional flow of money coming. And we as a business, Trovio, we run a couple of funds, and we license technology to the commodities industry. So we're involved in both sides, the commercialisation as well as the asset management side. And I can tell you now, the wall of money is coming when there's regulatory guidance, right? And as soon as regulatory guidance is here, all the institutional capital, when I say institutional capital, that's pension funds, superannuations, it's major allocators, multi-billion-dollar allocators. A few of them are in it now, right? And, we talked to a lot of them, but most of them can't do it because their investment mandates don't say it. So if we're market leading in that regulatory side of things, and it's going to give confidence to one of the biggest superannuation industries in the world to allocate money into this space. And when that happens, then I think it is going to be a game changer.
Egor, what are you expecting?
Sure. So thank you for taking the regulatory piece. I can talk about the fun stuff. I think there's a couple of things coming. One of the biggest ones, if we get there in 12 months, it'll be fantastic. But everyone has talked quite a lot about tokenizing assets. And what that really means is, besides tokenizing things that are intangible, like a Ferrari 250 or a Monet, which is useful in its own right because you're taking something completely intangible and illiquid and making it transferable and liquid, you'll start to see that there's a bridge between the people that are needed in order to be able to custody and quarantine that asset on behalf of the digital users. But you'll also start to see productive assets come in. So digital assets have shown you that we can do raises pretty quickly. ICOs have been able to gather a lot of funds very, very quickly. Now imagine doing that, but you're building a commercial building. So you get to have a decentralized autonomous organization that could potentially be a landlord. So you then take that side of the argument rather than just being a tenant or just being able to pay fees to that. So that kind of tokenization will start to come into effect, where people see that there's an intuitive revenue stream that can come from something like that. And then there's always the other side. We've spoken a lot about gaming, and I don't think we quite realise just how big that this is going to be. And I know Kieran's here somewhere, so I'm going to butcher this for him to clean up. There's one way to look at it where you have NFTs that are valuable outside of game, and then there's another way to look at play to earn, where you're creating an entire industry of new market participants. These are people that don't natively need to interact with crypto, but they can play games that are well designed and really fun to play. They earn an income. That income is tangible and valued in real terms. You can buy food and pay for rent, etc. And that creates an osmosis effect, an effect where you continue to play the game and continue to use that token. And we all know up here that once you enter into crypto, once you see that value, it's very rare to come back out. We don't hear many stories of people saying they've gone down the rabbit hole and realized it's garbage and come back out.
Yeah, I'd have to agree. I'd say the regulatory landscape will be pretty critical over the next 12 months as to how things play out. But if I was to look at the last 12 months, I think NFTs probably provided the largest proof of concept in the industry, and seeing how that space develops over the next 12 months is certainly something I'm paying a lot of attention to.
Perfect. Thank you, Sophie. So to wrap up, thank you particularly to John, Egor and Sophie for their answers to some tricky and also forward-looking important questions for the industry. So I hope that those predictions do play out. Thanks to those listening here in the room, and thanks to those on the stream. And yeah, look forward to seeing you around Blockchain Week. Over to Steve. Thank you.